Financial markets often get really stormy. To not get caught off guard, professionals need to assess market direction and momentum in order to determine if clear financial skies exist or it's going to get stormy. The free cheat sheet at CTKSmethod.org is the fastest way of doing this analysis. The cheat sheet is composed of 7 rows. The first 2 rows, row 1 and row 2, measure risk. Rows 3 and row 4 measure market sentiment and global financial health. Rows 5, 6, and 7 measure the new economy, the crypto market. CTKSmethod.org service members get 32 TradingView charts with structural indicators and monthly price paths for each chart of each row. Structural indicators help us to minimize fear in trading and investing. They give X-ray vision into financial charts and help you to stack probabilities like professionals do. Let's run the numbers. To our American family, have a very happy Thanksgiving holiday. And please remember the markets have gone to sleep in the US, except of course for crypto. Having the right tools is incredibly important. I put the Black Friday sale coupon for the 70% off TradingView. And please make sure that you register for the upcoming Profiting from CTKS Methods structure course. You can get it absolutely free, but conditions apply. You'll find it incredibly valuable. Just pop across to ctksmethod.org. Row 1 covers the VIX, the DXY, dollar-yen combo, the 10-year, the 2-year, and oil. The blue line that you see in the background is Bitcoin's price action, and you will see Bitcoin and the stock market closely follow each other. We actually use Bitcoin as a leading indicator of what can happen inside the stock market. One thing to be aware of when we look at the VIX, which is the volatility of the S&P 500, we can see that there's an inverse relationship. If the VIX is coming down, Bitcoin is going up. You can see that inverse relationship playing out. It is very important to keep your eyes on the VIX at the current time. A lot of people say, why is Bitcoin selling down? Because of the intercorrelation between markets. Bitcoin cannot escape the stock market's gravity. Right at the current time, we can see the VIX is basing. If we get a push up in the VIX, this will adversely affect the stock market and also crypto. We can see also that the DXY is starting to retrace. We've got retracement in the 10-year as well as the 2-year. Dollar yen has been coming down. If you're liking the video so far, please smash that like button and don't forget to subscribe. Hit the notification icon as well. If you want to get a feel across all markets, this is the best place that you could be. Currently on row 2, which is junk bonds, the euro dollar, the Aussie dollar, gold, silver, and copper. We can see that junk bonds have been doing well. As junk bonds move, so too does Bitcoin and also crypto and the main markets. It is very important to keep your eye on junk bonds. A lot of times people say, why is Bitcoin weakening? Bitcoin will weaken if junk bonds weaken and the VIX strengthens. Previously, there was a very strong and inverted relationship between the DXY and Bitcoin. You can see that the euro dollar used to just run with Bitcoin and crypto. But because of the change in policies inside the US, everything is changing. This is causing a lot of the charts to dephase. This is not problematic. They will rephase again in time. So just be aware that we're seeing some strength in the euro dollar and we're seeing that the Aussie dollar is still under a degree of stress. Gold has had a lot of negative price momentum, but it's starting to base. Silver has also had a lot of negative momentum, but it's much weaker than gold. Copper has also been coming down. The 2 keys to look at the current time are junk bonds in row 2 and the VIX in row 1. Row 3 are the major stock market indices, the S&P 500, the Nasdaq, the Dow, and the Russell. One thing that we see at the current time, the markets are definitely in an uptrend. They're currently weakening somewhat because we know that the VIX is starting to base. If the VIX starts to take off inside row 1, expect negative price momentum inside row 3 and also crypto. This is very important to understand. We actually use the S&P 500 and we refer it back to the NASDAQ to understand how market conditions are stacking. Stacking probabilities is incredibly important. We can see the NASDAQ is a little bit weaker at the current time. The Dow is doing quite well, but it's showing some degree of weakness. The Russell is the standout at the current time. Because it's flat like this, it's actually pointing to a degree of strength. That means that the basing of the VIX may actually not play out and go up that much. The markets are currently asleep for Thanksgiving, but just bear in mind that there is a very close relationship to Bitcoin and crypto and the major market indices, and therefore the VIX and junk bonds. All markets are intercorrelated and interconnected. When we look at the NASDAQ, we can see that big surge in the NASDAQ was reflected by a big surge in Bitcoin and crypto. And then it came down somewhat and weakened. But we've seen Bitcoin gain so much traction and so much momentum with the new incoming administration. Just bear in mind that if the S&P 500 and the NASDAQ start to fall and the Dow starts to fall and the Russell, that will place negative price momentum inside crypto. And also if they rally, that will push things the other way. That's why it's very, very important to know where things could be going. And the only way to do that is to look at structure. Therefore, we'll be looking into the structural charts on the S&P 500 and the NASDAQ today. Row 4 is how we look under the major market indices to see strength and weakness. It's composed of Apple, Tesla, Microsoft, and NVDA. We can see that Apple is currently performing extremely well. It's very, very strong. By stacking probabilities, we can start to understand which direction the markets may head. We've also seen that Tesla has been on an incredible run and it's starting to just consolidate. Microsoft is looking pretty good as well. It's overcome a level of short-term resistance and it's on its way up. It's still under support. But one of the problems that we see, NVIDIA is not looking too healthy. We'll look at NVIDIA's levels later in the structural analysis. Row 5 is all about the crypto market. We look at total crypto market cap. The blue line is Bitcoin. So as total comes up, you can see that Bitcoin is coming up, but all the alts are coming up with it. When we look at Bitcoin, that other line there is total crypto market caps. You can see, so there is a very strong relationship between the two. When you look at Ethereum, Ethereum follows Bitcoin's gravitational pull. MicroStrategy, which is inside the stock market, of course, also follows Bitcoin's gravity. We will definitely be looking into total crypto market cap and Bitcoin structural levels. The real issue with Bitcoin at the current time, it's seeking to get above $100,000. We had a bit of a sell down recently, and that absolutely perturbed people inside the market. There was over $5 billion worth of short-term holder liquidations. That was when investors suddenly decided to start trading at the wrong time. Row 6 is when we look under the major crypto indices such as total crypto market cap and Bitcoin to its associated counterparts to see if they're strengthening or weakening. So this is composed of Litecoin, Bitcoin Cash, which measures Bitcoin, Binance Coin, which measures the exchanges, and Ethereum Classic, which parallels to ETH. One thing that we can see, Litecoin is still under positive momentum, as is Bitcoin Cash. This favors a push up in Bitcoin's price. What about Binance Coin? It's still a lot stronger than what it was yesterday. Don't forget these are daily candlestick patterns. And Ethereum Classic is doing well. So far, the market momentum is positive, but Bitcoin is always moving in a wave, and therefore also crypto is as well. Looking deeper inside the crypto market through row 7, which is ADA, Cardano, Sol, Solana, Dogecoin, and XRP, we can actually see that there is still positive momentum inside the market. This is also on a daily basis. We have a degree of consolidation going on here, but it could be short-lived. if we can keep Bitcoin's momentum going to the upside. We can see Solana is a little bit weaker than what other crypto pairs are, but it's been doing really well. Doge has been flatlining and consolidating. It's trying to get up to higher levels, but it can't push itself up because Bitcoin is not supportive of that move. Even though the markets feel a little bit red at the current time, we're seeing signs of strength inside our different rows inside the cheat sheet. And this is exactly why we need to look at them. We need to stack probabilities. Level 1 and Level 2 standard certification draw what are called Stanfield levels or CTKS levels. You'll see these on the charts that I'm going to show you next. Thicker is always stronger. The definition of Stanfield levels or SLs, they're also known as CTKS levels. They represent the most statistically significant levels where smart money will buy or sell in the future, and thicker is always stronger. These are formed across all of price history in strict accordance with Level 1 and Level 2 standard certification from CTKSmethod.org. Service members get 32 trading view charts with structural indicators and monthly price paths. One very powerful way to get rid of fear inside markets is to do CTKS method paths. Here we're looking at the paths for the Nasdaq, and we've marked up 18,560 plus days worth of price data according to Level 1 and Level 2 standard certification. We can see at the start of the month the Nasdaq rallied really high, but now it's pushing towards its normalized positive price path. These price paths can be incredibly valuable to you because you get to constrain price from an upside and a downside. These paths are always structurally created. In other words, without a knowledge of Level 1 and Level 2 standard certification and how to draw the CTKS lines or Stanfield levels, you couldn't do these projections. When we look structurally at the market, we can see where smart money is buying and selling. Let's just throw on the service indicator to see how the Nasdaq is tracking at the current time. There's quite a substantial level of structural overhead resistance at 19,360. It stopped the upward move in the Nasdaq. One level to keep in mind is slightly north of 19,020. If we find structural support at this particular level, it's very likely that the Nasdaq can grind higher and re-challenge the 19,360. One thing that we notice is there is a degree of negative momentum inside the market. This actually favors a movement down towards around that 18,900. Fortunately, the buyers have come in and shown some strength and defended the 18,900 level. If the markets were weak, we would form a very large red candle. That has not been the case. The buyers have bought back in. Therefore, what we may actually see is a bit of a consolidation around this area. When you understand the CTKS method, it's an absolute game changer. You'll gain X-ray vision inside financial markets and inside and between different charts. When we look at the S&P 500, we're marking up all of price history through the service indicator. Let's just pop that on. What are we seeing right now? Just north of the 6,000 level, there is so much overhead structural resistance. It's created an enormous problem for the S&P 500. You can also see there is a very substantial level of underneath structural support at 5720. In order to stack probabilities, we need to understand that the VIX is currently basing. Junk bonds are currently curling over. It could be in relationship to this very solid structure in the S&P 500. We may get a bit of a pullback, which would be likely to pull back crypto as well. For the members of the service, we're anticipating a closeout at 6,009. The S&P 500 is currently 59.98. One thing to understand about these price paths, they are drawn at the start of the month and then never changed. It's vitally important to know where structural resistance and structural support are. Looking at NVDA's chart, which marks up through Level 1 and Level 2 standard certification over 9,000 days worth of data, we can see around that 147 level, we had so much overhead structural resistance that literally NVDA couldn't get through it. All charts are structurally bound. The problem with NVDA right now is it's entered a negative CTKS gap. This means that it could gap down to 128.20 and catch a lot of people by surprise. If we get rallies inside the major indices, we would expect the 140 level to be hit. But if the VIX spikes up and also junk bonds spike down, we would expect negative momentum down towards the 128 level. One of the most important things that you can observe with CTKS method structure as well as paths is where the negative price gaps exist. It's very important. If you've ever thought, why does a stock gap down? And this is the reason, because there are literally areas with no structure inside them. For example, when we look at Bitcoin often moves with structural gaps. When a structural gap is hit, it will create a lot of price volatility. If you're not aware that this volatility is incoming, you can get seriously swept out of a profitable position. Let's just pop on the service indicator so we can see what's cooking here. I'll just add in some price labels for you. From 98,546, we saw a light level of structural support when the price was just here at 96,036. Because we had a negative CTKS gap and we had follow through, we had to go all the way down to 92,710 to find structural support. The sellers were very strong around this and pushed it down to that 90,625 mark. One thing that you'll get to learn with structure, please make sure that you understand where the gaps are. The gaps are very important to understand. If you get a negative CTKS gap, it simply means there's a level of structural resistance, price is at a resistance level and falling to a support level. This creates what's called NSA, or negative structural attraction. If you get a passing through of a CTKS gap and this kind of behavior occurs, you can move down very, very quickly. But when you get positive structural attraction, the very same gap that brought price down will push price up. What happens next is all dependent on what occurs with actual price action. We've seen the price came back to the 96,036 and rejected. Unfortunately, it rejected again. Now, does this mean that we've got negative structural attraction down to the 92,710? This is why we actually look at the cheat sheet. If you look at the cheat sheet across the different rows, you'll see that in the crypto space on the daily basis, this is just zooming into the 30-minute, but the daily basis is reasonably positive at the current time. This is actually favoring a movement up, but you must keep your eyes on structural levels. The crypto market is a very changing sea of volatility. I would recommend that you just scan through the particular charts. In other words, keep your cheat sheet up to date and current. To create bullish momentum, we must get above the 96,036 structural level in order to move to 97,982. If we get the bears taking control, especially with a negative CTKS gap, we could find ourselves going back to 92,710. Remember, even in a positive day, prices can move wildly. Total crypto market cap is a very important chart to look at in conjunction with Bitcoin. And what are we seeing with total crypto market cap at the moment? There is a degree of strengthening, but we need to look at structure. Structure allows us to figure out where the actual true support and resistance is inside the market. There is a structural resistance level at 3.3 trillion and a structural support level at 3.18 trillion. If we start to gain momentum and especially make it over that recent high, retail will just automatically assume we're moving to the $3.3 trillion level. The unfortunate thing is that we don't have a lot of structural support inside Bitcoin's price chart. We've come into Bitcoin structural resistance literally as total came in here. As Bitcoin pulled down, the entire crypto market pulled down with it. Therefore, your major chart to watch is definitely Bitcoin at the current time. Bullish price momentum inside the crypto market will see an excess of $3.3 trillion getting hit. Bearish price momentum 3.18. But we do have structural support underneath, which is a really good thing. Let's have a quick look at Solana, and when we look at Solana, we know that we have to mark up all of price history in accordance with Level 1 and Level 2 standard certification. That's if we want the most statistically significant support and resistance levels in existence. Those levels are captured inside the service indicator, so let's just pop that on. This would be just like you marking up your charts yourself. I'll just put some label levels on here for you. This makes it a little bit easier to see what's cooking. You can see this negative CTKS gap. That can bring prices down very quickly, but also creates upside volatility as well. If you get a negative fresh air gap, which is what this is called, and what we saw when we came up into the 258 structural resistance level, and you can see that playing out here, when we recovered, we didn't really recover up to the level. That meant the sellers were defending and pushing Solana down. Because we had a negative CTKS gap here, we can overshoot price, and this is very important to understand. The 244 came back later on, just in the past 24 hours. But what we've seen is that there are three very important structural levels that we need to keep our eye on. One is the 244 level. For a bullish case momentum, we need to get above 244. We have structural support at the 233, but if this is violated, we'll open up lower levels of structural support. And because we've got a negative CTKS gap, that could fall fairly hard and fast to 218. Keeping an eye on the cheat sheet and the different rows is a really good idea. We can see currently the crypto total market cap is under a little bit of pressure. It's still reasonably positive, but we're getting some degree of weakness in. We're getting just a retracement on Ethereum. Of course, MicroStrategy is in the stock market, and that is currently sleeping. We can see there's a degree of weakness coming into Litecoin, Bitcoin Cash. Binance Coin is looking good. Now, what does this mean to us? It basically means that retail is starting to come in. This is a really, really good sign. We haven't seen too much of this recently. We really need to see it. Ethereum Classic is just doing a minor pullback, but it's looking very, very positive currently. ADA Cardano is still showing signs of strength. Solana is a little bit weaker. We can see Doge is just basing at the current time, and XRP is trying to take off. The key to note, across the long weekend and across the Thanksgiving break, there is a degree of upward positive momentum, but the key is when the markets open in the US, watch what happens to the VIX and junk bonds. The confluence of row 1 and row 2 will be felt by the major market indices, so please keep your eyes on those as well. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.